S&P is basically unch right now. Kevin Green taking a look at the levels into this close, but also next week too. KG, what are we looking for here today in the last half hour?
A whole lot of nothing, Oliver. It doesn't really appear that we're going to have any type of melt up or breakdown in the market. I mean, it does seem pretty collared at this point. I know you're it's not exciting for you, right? But,
yeah, I gave up there already. It doesn't seem like nothing's going on.
It seems like everybody's checked out. Look, from an upside standpoint, you're going to have resistance at around 57.55. 57.50 actually has the biggest volume on the day's session as well. So that's going to be a huge gamma wall, and that's obviously an area of open interest that we've seen as far as the resistance level right now. And then on the negative side, 57.40 is your area of support, which we're kind of testing that right now. We do have a little bit of a descending channel that is taking place. You can also say it might be a little bit of a megaphone, so maybe an indication of some volatility going into the close, but we've been pretty much hitting the upper and lower end of that channel on the dot for now. There's a longer term trend line to be mindful of too. We're still in a uptrend to be mindful of. So if you're a bull, you really don't want to break below the lows of today. And if we were, 57.20 is going to be your area of support. Once again, I mean, anything can happen, but it just doesn't seem, it seems like the market's pretty locked up right now when it comes to options positioning.
Okay. All right, so locked up. What about next week? Can it open up? It seems like we are, though, kind of getting range bound again.
We are. I would say for next week, after Monday's expiration, I would suspect that the 5,800 level is going to be the new area of resistance for the market. So kind of widening the upside potential for us for now, I think is going to be a pretty decent indicator right now. And I would also say the 57.20 area is probably going to be the primary area of support for open interest moving forward. Now, just be mindful, we do have some labor data coming out next week, and that's usually when we see some volatility in the markets. That's been the case over the last 2 months until we see otherwise. Expect that trend to continue. So I would say, I would suspect maybe we do try to challenge some of these negative gamma areas maybe once, maybe even twice before trying to break even higher, unless we actually have a really massive turnaround when it comes to the labor trends from ADP as well as from the jobs report on Friday.
Okay. Now, thinking about the grind, at least we haven't really moved lower. So it's not like this is, any meaningful setback whatsoever, obviously. It just feels like we're kind of getting pinned. So, I mean, this has still been a very good week for trend.
It has been. Okay, so it seems like you really want to kind of talk about that compression that we saw last month before that flush to the downside.
Yeah, you know what I'm kind of thinking about. Yeah, exactly. It's not quite there. We've got a more positive bias now, but yeah, that's kind of what I'm thinking of. Yeah.
A lot more. So the difference between now and then, Oliver, is during that time we had large cap companies and mega cap companies kind of keeping us afloat as some of the other stocks or smaller companies or smaller sectors within the market were actually fading. So breadth was actually getting worse during that time, even though we were kind of hitting that upper end levels. This time around, we are actually seeing breadth expand, even though we are seeing some pressures on the top end. So this is actually more, mega cap weighted pressure that's being put on us for now when it comes to the advance of the S&P 500, rather than say 460 stocks that are just drawing us to the downside. So I would kind of separate those two type of environments. We also had a seasonally low period when it comes to volume. We're really coming out of that right now. If you're looking at the 5-day moving average for volume, it is creeping to the upside. So the dynamics are a little bit different. Now, it doesn't mean that the results cannot be the same, but I feel a little bit more confident that the expansion and the participation from other sectors like today is something that's welcoming, and we are able to maybe blunt some of the downward trends that we're seeing in sectors like semiconductors or like an NVIDIA with that report that came out from Bloomberg earlier today.
Okay. The NVIDIA trade right now, about $3.60 lower, so we're kind of stuck back at that 120. VIX, a little bit of climb. What do you call it since Thursday, KG? A pop? I mean, VIX is kind of moving.
We're seeing a little bit of an increase in the VIX so far here, Oliver. And I would suspect going into the close, that's probably going to happen. We do have some geopolitical risk that's taking place right now, or events that are taking place right now. I would not be surprised if you actually do see a little bit of a risk premium taking place when you're looking at the options curve in general, until we actually kind of get more clarity as to any retaliation or anything of that nature between Israel and Hezbollah. So that is not surprising, but seeing a VIX move to the upside like it is today, and for the most part, maybe we're going to close flat. I still consider that to be a win unless we kind of break that 20 level, that 21 level on the VIX. I think right now we're still trending upward, barring any type of unforeseen event or black swan event. And then also just kind of knowing that the employment data just hasn't been great. So we should at least brace for maybe some choppiness, maybe some volatility next week. But the trend is still upward. And I think over the long term, that's still intact.
All right. So maybe we revisit this question at the close. But with the NASDAQ getting above its August high, S&P continuing records, I guess what? This is like an A to A minus week. It might have not been explosive higher, but it got us where we needed to be.
This is where we want it. Yeah, I mean, I don't think having these explosive markets to the upside of 3%, 2.5% days and things of that nature, Oliver, I just feel like they're not really healthy. Every once in a while, when you have a major event like a Fed meeting, or if you have like Microsoft reporting earnings and they're showing really good growth for AI, then it's understandable. But when you start having market days where you're getting 0.75% or 1% days each and every day, that's where it becomes a little bit unsustainable. From a technical standpoint, you start to question the durability of that price action until you actually have volume that really does complement it. We are grinding to the upside right now. We also have volume really complementing it. If we had a volume profile on the E-mini S&P futures, you can actually see that it's either going to be a volume resistance area or it's a shelf for springboard even higher. That we don't know yet, but I feel a little bit more confident that the volume over the last couple of, at least the last week or so, has kind of supported that. The bears are trying to sell. I mean, we have a lot of liquidity in there. We are grinding higher. We have breadth expanding. I consider this to be a win for this week. I give it an A. I don't need to see fireworks each and every day. I want stability in prices and an upward mobility when it comes to prices as well.
Steady as it goes. All right, that wins.